Hey, what's going on, guys? So today we're going to be doing some analysis on DEX index, which is a synthetic index that's offered by Deriv. So let's just try and jump straight into it and not try and waste so much time. Yeah, so we're going to start on the weekly time frame. So clearly here we can see the week starting off nice and strong. This level right here was taken out. We had a break of structure there. We went higher, dropped lower, came back high, reacted from this supply right there. We went lower, came higher, and came down lower. So off of this, we can see some engulfing candles coming straight from the top. And this being DEX 1500 down, it tends to spike a lot going to the downside, but then has some gradual but consistent moves going to the upside. So if we're to mark our weekly key levels that I already did right here, we have our lower one right there and the higher one right there. On the week here, we can clearly see that it's kind of forming some sort of a pattern. It might be a triangle or a flag, depending on how price decides to continue printing itself. It might break through these levels, come lower there, or we might just rebound to the top, retest, and go higher to take out these levels right there. So let's go to a lower time frame so that we can see everything clearly. Let's go to the daily time frame. And on the daily, we can see we are reacting off of this level right here on these bodies. So let's just mark that up right there. We tapped in clean. Okay, now it looks like we're headed to the upside. So let's mark out our market structure clearly on the daily. So price came high there, came lower, went higher. So we broke structure right there. We broke structure. This right here is our breakout structure. I'll be marking my breakout structures with just a letter B. And then we came lower. So we took out this level that was responsible for this breakout structure, which is an early signal that price might be changing direction. So once we took out this level, some people write this as a change of character, but we're going to be just writing SS, meaning structure shift. So market shifted structure there. We came in there, failed to close higher, we closed lower, and we formed a double top. Came lower, broke this structure right there. Broke it, dropped low to these levels. And then if you come to if you analyze properly, you come to find that here we left a fair value gap, which is just sort of like a magnet that pulls price into it. So we have a fair value gap there, and right above it we have this order block. So price then came and reacted off this order block right there. Tapped into the order block, made a low, came higher, failed to close or go any further higher. Then we came down, went back up again, and just dropped to the top, to the bottom, I mean. So after coming down to the bottom, price failed to break this level right there, where we have some liquidity right there. Failed to break it, came higher, went low, failed to break this level as well. But then always remember, where two levels are like this is termed as liquidity, and there's potential liquidity for price to come and take out, since price is always hunting for liquidity in these charts. So we have two liquidity. Let's say price is moving here. We've left this liquidity right there, and now we've formed some new liquidity up there. So which one gets taken out first? Price decided to go take out this one. And right after taking out this liquidity right there, we reacted off of this level. That's right here, this supply level. We reacted off of this supply level, dropped lower, and took out this liquidity as well. So we took out this liquidity as well. Let's just write it as liquidity slash breakout structure with a B. Breakout structure. Then came up higher. We tapped into the supply again, but then if you notice carefully, you find that price again didn't close higher than this level. The bodies are still below it, so we swept liquidity there. After sweeping this liquidity, we then had our structure shift here. There, structure shift created a new low right there. After creating this new low, we came back up and then broke this low, meaning this is a breakout structure. And right after breaking this low, price tapped into this key level, and now we're headed to the top. Potential areas that price might head into at the top on the daily time frame, we can see that before it went down to break this level right here, we had a fair value gap up there. Yeah, so let's just mark the fair value gap using a parallel channel. So this is our fair value gap right there. Yeah, let's mark it out, FVG. Put that inside to the right. Okay, that's our fair value gap. And then right before our fair value gap, we have this order block on the daily time frame. So now let's go to a lower time frame, which is the 4 hour, so that we can see what's actually going on. Okay, so this is what we have on our 4 hour time frame. Price is now in a phase where it's in a counter trend, retesting. So price might either go high, retest there, or just come down lower and break to these levels. Okay, so on the 4 hour, if we're to mark out our levels of interest, let's use an arrow for the 4 hour just so that it's clearer and easier to differentiate the levels. So we have this level here from the bodies. This is our 4 hour level. This is our first 4 hour level. Here we've made a nice round bottom, so this 2 is our level for the 4 hour. Oh, actually, let's start with this other one right here. Oh, start at this level right there. This is our 4 hour level, so we'll delete this daily just so that things don't get too congested. Okay, so this is our 4 hour level, and off of this level we have this demand zone right there that price seemingly is reacting off of. So let's just mark up this demand zone right there. Okay, cool. Let's scale lower to the 1 hour time frame, and this is what we can see on the 1 hour. So price dipped lower, get back higher, dipped lower. We tapped into that. We swept liquidity right there. Swept liquidity, and right after taking out liquidity, we took out this high in price. So this is showing us that price has shifted. We have a structure shift. Before that structure shift, our lowest point that led to that structure shift is this one right here. Okay, so let's go to the 15 minutes so that we can see things a bit clearer. Oh, my bad. Let's see, 15 minute. All right, so this is the 15 minute. We have our structure shift there. A level that led to this structure shift is right there. So we have two levels. We have this one and this one. This one we're not going to use it because price went above and then used it, then went higher. So we're going to use this level. We'll focus on this level right now, but if we're going to take any entries, stops will be right below this level. So let's just mark this out right there. So let's just make it lower right there, and we'll just cover the area where we might be putting our stops. Okay, so now we're going to use our Fibonacci tool right there. Place it up there, and then if we had to take any entries, it would be at the 70%, which is there, and it's marked up perfectly. It's lined up perfectly with our demand. If we had to take long entries, we'll take them up there. Stop loss will be down here, which if we enter 0.01 will be like $1 stop loss. And the higher you go with lot sizes, it will be, yeah, you do the math. So we'll take an entry there, put our pending order there, stops right there for 0.01. That's going to be equal to like 0.1, and that's going to be equal to $10 for a 1, and that's going to be equal to $100. So we'll go with the one lot entry from here, take profit there at our second take profit of the fib, and we have a risk reward of 1 to 3. Okay, so this is our entry. And now let's look at the 4 hours so that we know what's actually going on. On the 4 hour, we have this level as our main level. We have our fair value gap here, which will act as our magnet or way to like attract price to it. So let's just mark up our early fair value gap, which is going to be right there. It's going to be right here. This will be like our early fair value gap, and we can target this very fair value gap right there, giving us a risk reward of 4 to 2. Yeah, so until price actually comes to this level or shows us a way to like retest these levels, I'm going to sit on my hands and just wait or place some pending orders. But since today is Sunday and I have nothing to do, I'm just going to be waiting on this trade. Yeah. And another confluence is that today being Sunday, it means the new week has opened. And mostly when a new week opens, a candle, like for example here, when this new candle opens, candles have a tendency to go in first and leave a spike before they continue with the narrative or bias. So here, this being the new week open, the weekly candle is going in with a spike before it continues to tumble to the bottom and take out these weekly levels right there. Yeah. So thanks for tuning in, and I'll see you guys in the next one. Peace. Have a good Sunday.